Taiwan, which is up on your screen, it's 0.25% higher there.
Adani family promoters have managed to raise 15,446 crores by selling stake in the 4 group entities to GQG partner.
From the Indian perspective, the fact that the flows have been sort of gliding downwards.
I think it's absolutely a coup of sorts to get somebody like GQG to buy into, the Adani portfolio of companies at this point in time.
The promoter entity that has sold stake, and which is why the free float in all of the Adani Group stocks and the 4 out of the Adani Group stocks that saw the block deals yesterday have actually gone up.
Breadth of the market is heartening. You have 1,500 stocks on the Nifty that are advancing.
Our portfolios are cautiously optimistic in terms of economic recovery in the domestic market.
There are 6 lenders of whose data I have a total a little under 60,000 crore is what they have as an exposure to the group.
The regulator PNGRB, they've gone ahead and proposed a tariff hike, that's a unified tariff hike across GAIL's pipelines to $60.92 per MMBTU.
A 200-point gain on the Nifty.
It has been a momentous occasion for us, hitting this 5 million mark.
What we have done is reorganized everything under one brand.
Andhra Pradesh is blessed with the gift of abundance.
We have Nifty sitting with gains of 260 points, has been able to sustain those higher levels.
It's a super Friday. You're with us here on a fresh new edition of Closing Bell. I'm Prashant. And we're coming to you live from the CNBC TV 18 Motilal Oswal studios. With me, my colleagues Reema and Surabhi here in the studios. Nigel, as always, joins us from the newsroom floor. Guys, hi, good afternoon. It's a good Friday. I mean, absolutely, it's a good Friday. And we're all pumped up, not just because it's the last hour of the week, but it's also a good way to report market, isn't it? Down and down, but now it's firmly higher. And I think it'll stay like that over the next hour or so. The way the market has been trading has been with full confidence. No look-backs, no give-backs, no pullbacks, just up and up through the course of the day. So it's a spectacular bounce back. That's point number one. And we are getting this after a long time, mind you. The Adani promoter fundraise, I think, has infused a fair bit of confidence. And I was saying this earlier, it is important for Adani Group stocks, but because there was so much retail interest in this group, right? All the listed stocks, I think this fundraise and perhaps, at least in the near term, some of the issues perhaps are in the rear view mirror. I think that does provide confidence. Overall, it helps sentiment in a big way. I think cannot be ignored. Now, the Nifty is, with this rally that we are seeing, this very sharp rally that we are seeing, is above the first retracement resistance level. What I mean by that is the Fibonacci retracement of the recent fall, the 38% comes in at 17,591. We are above that, and we crossed that in the last 40 minutes or so. We're at 17,623. A little higher, if you move a little higher, the moving averages come into play. The 20-day moving average is at 17,704, and that is about 80 points away. So that's the next kind of resistance to watch out for. Banks, they anyway crossed the 61.8% retracement of its own fall early on in the session, because banks have been the stronger part of the market. The PSU Bank Index is up 5%. We're also on the Bank Nifty above the 20-day and the 40-day exponential moving averages. So the banks are clearly looking extremely strong. I think for the Bank Nifty, the 20-day, in a way, on a closing basis, becomes a bit of a support. I mean, as you move higher, some of the resistance levels become support, both for the Nifty and the Nifty Bank. Amidst all of this, I think, you still have to have one eye on what US markets will do. And there it's very data dependent. Later today, we get this ISM services number. ISM manufacturing showed prices paid were very strong. Services inflation is the bigger problem. And I think, the Fed terminal rate, etc., is a moving target right now based on what data shows. So far, it's been hot. Let's hope data is not as good. It comes in a little weaker, which provides US markets also to breathe a little easy. So far, it's a solid day, 1 3/4% on the Nifty. Reema, hi.
Hi, and the global markets have been supportive as well. So look at Europe right now. Europe is currently up close to about 0.5% across the key indices. It's all the sectoral indices Back home in India, currently in the green, but it's the banking, the PSU banks and the metals leading the rally. In the banking pack, you've got State Bank of India higher in trade, but outside of that, UCO Bank pulled that stock up. It's an 8.5% rally on that. Union Bank is up by nearly 6 to 7%. Metals are higher in trade. And then you've got the support of heavyweights like Reliance Industries. Bharti Airtel has crossed over and trading above its 200-day moving average. So many heavyweights are also fighting for the markets on the way up.
Oh, they absolutely are. And I think, it's one of those rare days after such a long time where you've got this confluence of good factors. The rupee as well, by the way, the rupee has been really, really strong. I mean, it finally fell below that 82 handle to the dollar. That's one good news. Global markets shrugged off this move in yields for what it's worth. I mean, at least as of now, we don't know how long it lasts. That's the rupee move. And then coming back to the central story, Adani. Well, the stocks are up and about. They have been right from the start of the day. In fact, if I check levels now, I think Adani Enterprises was still quoting a gain of almost, 14 to 15%, if I'm not mistaken. That's ports and green are between 5 and 10%. Yeah, Adani Enterprises 15%. So some very, very solid gains. And I think the market is not just happy with the money that has come into the promoters, but where the money has come in from. And I think that has made all the difference. The market seems to be very convinced by this entity, GQG Partners, and the man who heads it, Rajiv Jain, with his track record, 20 plus years in the market, someone who's been a Morningstar top performing manager in 2023. He's been around for a long time. He's been dabbling with other Indian stocks as well, not just Adani, all of it put together. The fact that they're managing $90 billion across markets, they're listed in Australia. I think the credentials of GQG, as well as the man himself, the market's given its verdict, at least on that, for the time being. You'll hear some of that commentary come up on the screens as well. Prashant, of course, alluded to what he had to say himself personally about Mr. Gautam Adani. And he's chosen to, Prashant, to quote you, to put his money where his mouth is, really. And I think this is a resounding thumbs up that the market has given Rajiv Jain and his investment firm.
By the way, Surabhi, the massive move in the rupee is also, I think, tied to the Adani inflow.
I think so, yeah.
A large portion of it. There was some relative underperformance, etc. But I think, almost $2 billion inflow. I think that is contributing to that. It's a very large move, right? Yeah. I mean, 82. I think we broke 82, 0.75% move.
No, absolutely. I mean, that's what we were discussing, Nimesh and I, in our digital segment, Who Moved the Markets. By the way, you can catch that on our website, CNBCTV18.com, in the binge section. The fact is that earlier, perhaps you could, the market was arguing about the nature of investors and who's really putting in money here. But this time, it's a definitive thumbs up on GQG Partners. Anyway, we've gone on a good bit about Adani, but you tell us, Nigel, what are you tracking this Friday afternoon? Finally, the smiles are back after quite a while.
Well, the markets liked, the big name coming into the Adani group. I'm just looking at the volumes. I'm wondering whether there will be any name that will come out today as well, because the volumes are massive on the Adani group stocks. So good on that. In the morning, we were talking about a freaky Friday. It's actually a fantastic Friday. The bulls will be feeling good with only 60 minutes to go in today's trading session. And the shorts are clearly getting squeezed out. And there is evidence. The Nifty is up close to around 250 points. And the open interest is down by close to around 3.5%. So it's visibly a short covering bounce. Later on in the day, we'll get the data, by close. But there's a short covering bounce that's playing out on the Nifty for sure. On the option side, well, at the start of today, you saw the 17,400 put was active. The bulls would be pleased. In an uptrending market, you're seeing 17,400 put getting active. Now we're seeing 17,500 as well as 17,600 puts that are getting written. So that's giving confidence. In an uptrending market, you're seeing put writing. So maybe this base of the market is moving up. And finally, what's on the bulls' wish list? Well, they'd like to see the Nifty end closer around the 20 DMA. The level should be up for you on the screen, 17,700. And the Nifty Bank, which has conquered that 41,000 odd mark, can it head towards the 50 DMA? So if there was a wish list, then these are the two levels that the bulls are looking at on the Nifty and the Nifty Bank. So good going till now. Final 60 minutes. Who's going to go into this weekend parting? As of now, it appears like it's the bulls. Back to you guys.
Indeed, the bulls, the Nifty is currently up about 1.82% for the week so far. Let's tell you what we've lined up on the show today. Adani stocks spring up after marquee global investor GQG Partners buys over 15,400 crore worth of stocks from the Adani promoters in 4 group entities.
We'll put the spotlight on the rupee, which has surged in today's trading action versus the US dollar.
Shree Cement is the other stock in focus after Goldman Sachs downgrades the stock, citing lagging capacity growth and narrowing profitability gap.
And as always, we'll chat with our alpha manager of the day. Raunak Onkar of PPFAS Mutual Funds joins in today to talk about their top sectoral bets.
Okay, well, that's what's lined up. Mitesh is with us to run us through what he's making of things. Mitesh, hi, afternoon, welcome back. This is a good looking market to report on and providing a fair bit of relief, I guess, to people with portfolios seeing some green. But if you're trading now, what should one do? You know, the Nifty is coming up to some moving averages, still some distance away. Bank Nifty is already above the 20-day, the 40-day exponential. Where would you place stops? What kind of trades would you take?
So, good afternoon, Prashant. One, I think clearly today morning, once we start getting past 17,500, the stance has to be aggressively on the long side. And the first target now, I think, which I look at, because the strength is very good and the Bank Nifty also participated with good strength. I think that gap which happened on Wednesday should be the key area last week. So 750, 800 is the target area for the Nifty. So we still have about 125 to about 150, 160 points on the upside left at least. And then we'll take it from there. I think there could be some profit booking around those gap areas. And 17,500, 520 still remains the area where, I would want to place my stop loss as a pivot. So any 30, 40, 50 point decline, I think can be used to add on to long positions if you have, and 17,520 is the trailing stop loss. We'll look to take some profits around 17,750, 17,780 kind of zones, and then we'll see from there. So trading with long buys, I in fact have a couple of banking names on the list. HDFC Bank is on the buy side with a stop at 16.05 and a target of around 16.50 on the upside. While we had earlier Canara Bank and PNB as buys, I think Bank of Baroda is also really showing signs of continuation on the upside. So that's a buy with a stop just below levels of 168 and a target of around 181 is what I think traders can look at.
Okay, all right, Mitesh, thanks so much for that. 17,520, that's the stop loss if you're long, as Mitesh just said, and we've got a couple of stock picks as well. But it's time to focus on the main event today. Adani Group stocks, they're moving high after the marquee investor went ahead and bought stake worth $2 billion odd. You know, I'm lucky Nimish comes and joins me in the newsroom because he hinted that, it could be a large fund. Maybe he told me the name as well, Nimish. I mean, this is clearly, caught everyone by surprise. And the shots have got squeezed on the wrong side. Tell us more.
So, Nigel, in the same time, yesterday we were talking about the possibility of a promoter entity seller and a possibility of a large US-based funder buyer. Now we have confirmation of both, right? The promoter entities have sold and have raised 15,500 crores by selling stake in the 4 group companies. And the buyer is who? Like GQG Partners, one of the marqueest names that we can hear. He's been a long-time India watcher as well. He's been a long-time global watcher as well. And he's put in $1.8 billion in the Adani Group at a time when there is so much of noise and so much of negativity. So that speaks for the volumes, and that's clearly showing up in the stock moves as well, right? Adani Enterprises are 15%. Last when I checked, Adani Ports was close to 10% up. All the other group stocks are upper circuit. So that's the reason why we've seen a big move in these particular entities, and that's rubbing off in the banking sector as well today. So that's the news part. Now, a little bit about Rajiv Jain and GQG. GQG is a global fund which globally manages $90 billion, right? Yes. So that's a kind of size. And this has only been done since 2016. So between 2016 and 2023, this guy has managed to have an AUM of $90 billion for the global investments. Within emerging markets, they manage close to $11 to $12 billion. That's the kind of size they have. And even then, they have a huge exposure to the Indian market. So nearly 30% of the fund in the emerging market is parked in the Indian market. So that's the kind of size is put in. Now, if you look at the top holdings of this particular fund, especially the India holdings, you have the best of the marquee names where he's invested in, right? ITC, HDFC Limited, Reliance, ICICI Banks, SBI, Sun Pharma, Tata Steel, Bharti, Airtel, HDFC ANC, the best names are there in his portfolio. So a big marquee name coming in, that to a like of GQG Partners, putting in $1.8 billion, giving the commitment not only for the group but for Gautam Adani as well, and that speaks, and that's actually his rub-off in the entire stocks, right? I mean, all the stocks are buzzing in trade, and a big rub-off on the bank stocks as well.
Well, that's right. Yesterday when we had this chat, Nimish, we said that the large fund could come in. That will give confidence because the promoter entity will have money, could have a positive rub-off onto the banking names, and even MSCI, there could possibly be a reshuffle out there as well. So it appears, at least as of now, all of that has played out. So good going on that. But we learned from sources that the RBI as well has sought details of banks' exposure to Adani Group, including their international as well as investment book. Lata is joining us to fill us in with further details on that front. Lata?
Well, no, actually, this is very positive things that I heard. Along with the Adani Group stocks since Jan 24th, you saw a goodish bit of beating of SBI, BOB and such stocks as well. Now, despite these banks coming out and clarifying their exact exposure, there was this niggling worry that, some of these banks like SBI and BOB have a big international loan, about 18-19 billion increase over the last couple of years. And there was this niggling worry that maybe that is not getting included. Maybe some of these have found their way into the Adani Group and it's not getting included. Now, I have it from the highest possible sources across the banking sector that whatever data RBI has includes the bank's investment in their international book, in their investment book, in case they've bought any bonds, and in their clean loans to the Adani Group. So all kinds of possible exposure is included when Reserve Bank asks these data, and this includes NBFCs, and this includes the data that banks have told us when we have asked them about their exposure. That 0.9% of our outstanding book that SBI told us. That includes every possible exposure, so people don't have to worry that some of this was excluded in the data that was given out. As well, now, separately from all this, investors are less worried about exposures itself because of the group's proven ability to raise money when it comes to it.
Okay, Lata, thank you very much for that. At least for the day, the market is very excited that a star investor, a marquee investor, has committed a very large amount of 15,500 crore in the Adani Group, giving the market sense perhaps he believes the worst may be behind the Adani Group and there is value at current levels. Prakash Diwan is now with us on the show. Prakash, do you think at least these 4 Adani stocks where the block deal has taken place, we have got a bottom, a floor has been made, and what have you made of the rub-off impact seen on PSU banks?
Good afternoon, Rima. So, yeah, I mean, as I shared, even when we're discussing specifically the anticipated behavior of the market, and it's panned out exactly the same way. You have banks looking much more stronger, now that this particular thing is off. The risk is off in terms of what could have happened and what could have potentially snowballed into a systemic failure. And as Lata clarified, even the international exposure, which at times has a little bit of opacity around it, could possibly be covered in this. The numbers that we've shared, which is for a system like ours, it's just about under 1%. And that's something which will assuage a lot of anxiety and worries. The other thing that this has done, Rima, is that the market is getting a message that, you have people with credentials which are very decent, people who manage money of scale and who have familiarity with India and who are willing to go on record explaining why they have bought into it. With all these factors, the message is that, possibly it's now time for fundamentals to take forward the growth in these stocks or the price action in these stocks. The sentimental bottoming out is over. The probably the most negative feelings that people had, the kind of, the issues that people kept on bringing up related to stock prices and the volatility and things like that. All of that probably is likely to get put to rest. Of course, it will also now depend on how the group companies start galloping ahead in terms of their asset build-up, their utilization of the asset, the projects that they are picking up, and whether this capital is going to be deployed in augmenting stakes in some of the more growth engines, the higher growth engine businesses, or is it going to just recover lost ground? So that's going to be the capital allocation is going to be watched by the market next. And as I said, the fundamental news flow is going to drive the behavior of these stocks and the response of people thereof. So very clearly, you'll probably see a short squeeze, which is accentuating the move today. When it started off, it was 5% on enterprise, then it went to 10, then 15, and now beyond that. So it very clearly is a technical reason why it's going up. But I think you'll see probably some more names from the group companies also see some investments come their way from some of these investors who have a long-term orientation and a comeback of confidence into the businesses.
Yeah, absolutely. I just want to add one more point to what Prakash said. while we're, of course, discussing this big transaction that took place yesterday, I think the timing is also very, very interesting. And we must remind viewers, I mean, our moral responsibility as journalists, that there's also a parallel event, which is what the Supreme Court has directed SEBI to do. And that's a separate, investigation/probe that needs to happen. And we will only know the findings if they are made public after 2 months. But I guess it would work well to also keep that at the back of your mind when you're evaluating the company, the groups, and just all the events and the news flow around them.
Just to add to what Prakash said, right? One is, of course, buying at a certain price. So that tells you that a large investor finds value at a certain price. But the other thing, and you read the full interview of Rajiv Jain, it's very clear. Obviously, I mean, if you put in $2 billion, you think, you will make money, right? Which also means, but the interview also makes clear that he doesn't see any corporate governance issues, because those were the bigger issues, right? And that's the reason why, that's what started this whole thing.
Absolutely.
So I think that's the other message which maybe which I'm sure people will take. That's a bigger vote of confidence rather than, you bought it at 600 or 700 or 800. But I think that's the underlying kind of message to take away from this one. The interview is it's a nice one. I mean, the way he says, well, he was asked, what do you make of the Hindenburg report? He says, well, we think they're wrong and we are right. So, but he also, I think, to the Financial Times, he says, we think we are right, but we could be wrong. So there is a bit of a humbleness as well. It's a large sum of money to put in. But I like that. He's every time actually you make a transaction and it's an opinion, right? You're saying you're buying and somebody else is selling. So you're saying that, well, I'm right, you're wrong. But a company to a company that with a little bit of humbleness, I think it's a good thing.
Fridays typically are movie release days, and if in the mega Adani saga, we know for a fact that a new star has been born, and it is Rajiv Jain. So if there was Hindenburg, who was one major sort of role player, and now we have a counterweight on the other side. But Lata, before we let you go, now in the midst of all this, the rupee has been quite stunning as well in terms of its move today. Not too sure if it has any link with this Adani sentiment or if it's simply reacting to a little bit of the weakness in the dollar. But your thoughts on the way the currency is shaped up?
The rupee is not reacting to sentiment. It's reacting actually to the flow. 1.8 billion or nearly $2 billion has flowed into the market for the purchase of a stock by an obviously New York headquartered or Australia headquartered listed company. So it is dollars that has come in, and that accounted for the rise in the rupee, fall in the dollar rupee to around 82.25 in morning trades. At that time, we understand that Reserve Bank came in and smoothed the flow. But thereafter, what has happened appears to be either people are winding down their short rupee positions or are taking fresh short dollar positions. The flow is over, but the real move of making the dollar cheaper than 82 happened in late afternoon trade, and that clearly is people taking a position on the value of the currency. Now, actually, rupee fundamentals were stronger probably for the last 10-15 days when we got the January trade data. And it was the services growth, services exports was so substantially higher than anyone expected that January was actually a current account surplus month. But it couldn't find play because the dollar had started strengthening and had gone on all the way to 105.5. But now with the dollar also finding some kind of a roof over there, plus, the actual flows coming in, you're seeing the market express itself, and we're seeing the strength on the rupee. Of course, the rupee can depreciate yet again if we see a risk-off sentiment globally. But clearly, for the moment, the fundamentals of the rupee, which were strong after the trade data, is finding expression again because of the flow of the Adani's transaction dollars coming in.
All right, Lata, thank you very much for that. That's a very powerful, strong move tied to stock inflows, which the currency is seeing as well. The PSU Bank Index is up 5.5%. I mean, that's the other one. Just want to leave you with that. We were talking about it, how things are, the rub-off impact will be there, but 5.5%, as I was telling someone, if it's worth doing, it's worth overdoing, right? I guess.
You're in Friday mood, Prashant.
We'll take a quick break here. We'll be back. Raunak Onkar will be with us of Parag Parikh Mutual Fund on the other side to talk about what he's making of things. Stay with us.
Welcome back to Closing Bell. Well, the party is getting even better. The markets have moved to the high point of the day. But one stock that's under the weather is Shree Cement. And from the time the Adani fiasco broke out, investors have found more comfort in the erstwhile cement big names like Shree as well as UltraTech Cement. Now, since the group appears to be better placed, there is a reversal now in the recent outperformance. So if you look at that chart, you'll see even after today's big up move, still Shree Cement is much higher in the last 1 month. Goldman Sachs, they have downgraded Shree Cement though to neutral with a target price of around 23,550. They value Shree at around 14 and a half times odd, which is lower than what the long-term median is of around 16 and a half times. They've also highlighted two big reasons. Reason one is on the lagging capacity growth. Shree has announced capacity expansion plans, which point to around a 6 to around 8% capacity CAGR for the next few years. That's FY25 to around FY30. Which is much lower than the 13.5% that it's delivered in the last 10 years. And also, it's much lower than what peers are going to be adding capacity at. Whether it's UltraTech or Dalmia, they are likely to add capacity at around 10 to around 11% by FY25. Reason number two is they're narrowing the profitability gap now. Shree Cement is now expanding outside Rajasthan, and so its incremental capacity profitability will come at or below the industry level. They also highlighted that the industry profitability in the East has historically been sub 1,000 rupees per ton, which is lower than Shree's north-based capacities, which made close to around 1,200 rupees per ton. Shree, remember, were pioneers in the alternative power sourcing, but now other players, they are catching up on the WHRS, which is the waste heat recovery system, and also renewable power, which lowers costs. So that advantage as well is going away. So that's why Goldman Sachs a little bit cautious on the Shree Cement stock.
Okay, thank you very much for that, Nigel. Prakash is still with us. Prakash, thoughts on Shree Cement and what Nigel had to share?
So I do agree at the points which the brokerage has pointed out. But you know what you have to understand, Shree Cement has grown historically and very consistently with internal accruals and hardly any external debt to rely on. There was only one time when in the Middle East they looked at an inorganic proposition which somehow didn't work out and which the market also didn't like. Apart from that, I think they've been stupendous in terms of how they've utilized capital and efficiently managed this. And that keeps them absolutely very competitive. Now, even if their expansion is not in the early teens as an as a UltraTech or Dalmia would be doing, they'll make sure that they grow at 6-8% capacity, so it's very profitable. So I'm a believer that any fall in Shree Cement just makes the valuation much more reasonable because it tends to be valued at premium valuations. But I somewhat don't agree to this logic that because the capacity is not as well driven or this not playing catch up with the other players, they're going to miss out on anything. I don't think so. In fact, the market will give you adequate pockets to sell your things to, and that's what's more important. You sell what you produce, but at a profit.
Prakash, let's talk about the, beyond Adani, there's another newsmaker today. It has to be State Bank of India. There's a 5% up move as we speak. SBI right now at 561. Buy, sell, stay away, eternal buy. What is it for you?
No, so see, one thing you need to realize today's move in the banks, particularly SBI and the larger ones like BOB and all, is probably a bit of short covering, a bit of catch up with all the lost ground, which was more sentimental than driven by fundamentals. The bank kept on clarifying, giving statistics and numbers about their exposure to the group, but still, people had that niggling doubt that it would probably be much more beyond that. Now, going forward, what's going to happen is most of the banks continue to grow at scorching paces, which we've seen in the last 2 quarters when banks suddenly became the darling of the market. Is going to be a challenge, So NIM growth and anything which is in the mid-teens is going to be very, very high as a benchmark. You probably have cost of funds going up as well because you've still got interest rates peaking up. So there's this whole rush to competitively increase your CASA at some reasonable level. So all of those things will happen and will start tempering. So this expectation and exuberance on growth is what you need to temper. From that perspective, it's probably a nice time to buy into SBI whenever there is some sort of a softness in the price. But you would need to have a slightly longer term orientation. The Adani saga is probably played out today well in terms of the effect. But organic growth itself is something which you need to understand is going to be fairly even and moderate. It's not something which is very spectacular for at least the next 2 quarters. And then we'll, of course, have to look at how things happen after interest rates have peaked out, if they do. So my sense is you would buy SBI, but at reasonable levels. And as a matter of disclosure, I do have personally exposure to the name. But it's definitely something you could have in your portfolio and not be too worried about.
Okay, all right. Always good hearing your thoughts. Prakash, thanks so much for joining us this Friday afternoon. Hopefully, it's a good evening for you as well. Thanks so much for joining in. Well, the markets are doing well. So Nimesh is back with us. Nimesh, what are you picking up in terms of D-Street chatter? I think par for the course, right? In the last 10 minutes, the markets have come off 50 points from the top, but maybe getting into a weekend, some lightning opposition.
Correct. So largely, it's been a trend for the market, so to speak, and good for the bulls, largely because of the Adani saga. The Adani stocks having a big impact on the overall sentiment, and that's helped the banks as well. So that's the clear feedback. In terms of flows, again, while the index is up so much, there's been a big rally. It looks like more of a short community rally rather than a genuine buying from the larger institutions. The flows are mixed. It's very selective. That's been the trend for this week. For the last couple of days, there is no directional flows into any particular sector. It's been very, very stock specific. That's the overall feedback. So that's in today's trade as well. I guess the way bank stocks have moved up, there has been a big relief rally on the bank stocks. Looks like this can continue as well because it's helped by some short covering as well. So that's the overall feedback. But broadly, two things. One, it's a clear trend for the markets. It's helping the bulls. But I guess from a flow point of view, it's again quite mixed and very, very selective.
Then let's get straight to the stocks. Nimesh, what are you picking up on individual counters?
So in terms of individual names, the first stock on my list is HDFC AMC. Last week, I explained nicely about the impending block and how it can impact. Now there is a very strong indication that that block can come very soon. It's most likely going to be in a block window, and I believe it's going to be a clean-out trade from within. That can come very soon. So that's the first stock. The second stock is Indian Hotels. Now, for the last few days, there has been a consistent buying flow in this particular name, and the feedback is that maybe some of the long-only funds are accumulating this stock at a specific price level. So that's Indian Hotels for you. The third stock is Godrej Properties. We saw a big move in some of the other real estate names in the beginning of this week. Today, Godrej Properties is buzzing in trade on very small flows, but I guess it's also helped because of the fact that Jefferies has added Godrej Properties into their model portfolio by removing Godrej Consumers. So they've moved from Godrej Consumers to Godrej Properties, and hence a move on that stock as well. And the last stock is Tata Steel. This is very interesting. Huge volumes in this particular stock. There were multiple blocks as well, and even then the stock is up 2%. Largely, the indication is that one of the long-only fund is a big active seller in Tata Steel today. So maybe there could be an indication of that selling closely coming to an end, and hence a bit of a move there. I mean, today's move has been used to sell a pair stake by a very large long-only fund in Tata Steel. That's the feedback.
Interesting list, Nimesh. But as I was telling you, the bar goes up, right? so we want more. कुछ अदानी level के लेके आओ.
It can't happen every day, right, Prashant?
I think Nimesh deserves a great weekend. He's had a busy week like all of us, but more pressure on him because he's the one sort of working those phones and getting the inputs.
I'm just, of course, pulling his leg. But
Prashant, I was wondering which bar were you talking about first, but got that.
The bar. I know what you're watching, Nigel. I mean, eyes are firmly set. All right, Nimesh, thank you very much. Great getting that list. So HDFC, AMC, Indian Hotels, Godrej Properties, and Tata Steel are the four names that Nimesh is highlighting. You want to keep your eye on. Well, our alpha manager of the day is with us. Raunak Onkar is co-equity fund manager and head of research at Parag Parikh Financial Services Mutual Fund. Thanks very much, Raunak. Great to have you with us here on the program. This large deal which happened yesterday, does this change or turn the tide a little bit? It's been a bit down and out, right? Or do you think it's still going to be pretty challenging? I'm talking about the near term.
Hey, thank you for having me here. Good to be back. For a while we have been seeing that domestic markets are actually quite elevated in terms of valuations. It doesn't help when the market overall goes up and the valuations also go up. The good quality businesses remain very, very highly valued. So it is difficult to allocate new money or new capital to some of the names that we like because they're expensive. At the same time, the existing companies that we own, they still are trading at reasonable multiples, and we continue to add them in the portfolio. And after saying that, we do have about 18-19% of cash also in the fund. So we are waiting for valuations to cool down a little in the companies we like. Days like these, the valuations go up for everyone.
Raunak, so which are the companies that are on your watch list where you are waiting for valuations to cool down?
Oh, so we have a very long coverage universe. So it will be consumer names which we have been liking for a very long time.
Give us a few names. Give us a few names which are close to value zone.
Yeah. So see what we have been adding in the portfolio are private sector banks and some of the IT names where we already have our positions. We have been adding incrementally to them, but to create a new position in a stock like that in those sectors, it's very hard because the valuations have been stretched for a while. So it remains to be seen when the valuations normalize. But at the same time, we are finding the existing ideas very compelling. The new ideas in FMCG, for example, we only like ITC, which we still hold in the portfolio. But the ideas like HUL or other good quality FMCG names have been out of reach because of valuations. So we track a lot of companies, but we are very selective when it comes to paying the right price.
Parag, hi, good afternoon, Surabhi here. If I look at the January fact sheet, I think you were sitting on about 15% cash levels, if I'm not mistaken. I'm talking about the FlexiCap fund, that is. Is that still the same, or have you used this lull in February to deploy some of that money?
So we deployed some of that money, but the cash position will be what you see is the cash position. And plus, if you add arbitrage to it, it will be about 18-19% of cash holding. So we have deployed to some extent. We have also added some new funds. Clients have given us some more money. So we added where we have positions in the portfolio, but no new ideas have been added.
Okay, hi Raunak. You know, some of those PSUs, when no one was looking at it, you all went in and picked them up. Coal India, NMDC. That NMDC special situation is over, or you're still playing for maybe a divestment?
Yeah, so we are waiting for the announcement to happen when the divestment will actually happen. We don't know when. But yeah, the situation has played out. The other PSUs, again, there is some runway ahead of them for them to perform better in terms of numbers. We are not good at market timing. So we basically find these companies to be reasonably valued. We can still hold on to them.
Some very interesting holdings, obviously, in the FlexiCap portfolio. ITC, I don't know your average cost price, but I know you bought it a while back. So I'm sure you're pretty happy with that one. There's also IEX. Just your thoughts on the power space. I mean, you have this power exchange name over here. How else are you looking at some of these names? Because we know about, you know, the power situation, peak demand. And if I can extend that, capital goods is the one area of the market where, you know, a lot of people are pretty convinced. Are you?
So capital goods is a great area, but it depends a lot on the capex activity that happens in the country. So far, private sector capex has not been picking up at the pace many companies expect, but government capex has picked up. So capital goods companies exposed to that capex have benefited a lot. However, the power sector value chain, we are positioned in the fuel, which is Coal India, the transmission business, which is Power Grid, and we also own one exchange, which is IEX. So we haven't gone to the generation companies yet because the valuations are a little stretched and the ROEs in those companies are capped. So it's really hard to make a very high ROE number over a period of time. But there is demand for sure. The growth will be steady in these companies. These are again cash generating businesses. They pay out a lot. And in case of IEX, it's a market platform. So it's a fee-based business. Of course, competition is coming in, but it remains to be seen how you can dislodge a player which has such strong network effects already in place.
You also have a holding in names like Cipla, and very recently there was news about that Form 483 US FDA issues at their Pithampur unit, which is very integral to their overall operations. It contributes significantly to the revenues and EBITDA. Did you use the decline in Cipla to buy more of Cipla, or are you a bit concerned about what came out on the US FDA front?
So if you see the entire pharma positions that we have in the portfolio, it's about 5% of the fund. We have a basket of pharma companies for that very reason, because it's becoming very hard for pinpointing which one pharma company will do well. And even if you're able to pinpoint which will do well, you always have a risk of something like this happening where FDA alert or warning happens to these companies and their future plans might be in disarray. So it's very hard to find a good single business which can do well. So we decided to diversify across a diversified set of players, and we built a basket. So yeah, it's a 1% position, and we are concerned about the business going ahead, but it happens. So many companies have come out of these FDA issues. They have resolved the complaints that the FDA has highlighted, and the business is normal after that. But many have not. So it's a mixed bag to see all these companies.
Raunak, what about ITC? Done very well for you. Still some way to go on the upside?
I don't know about the upside, how long it is going to go, but I think the
it's been smoking hot, Raunak. I mean, I think it got it took offense to all those memes that came out, and now it's the only one that's laughing. You're still holding on to the entire sum that you'll have, or do you think that it's now reaching that stage where, in fact, you're going to take your foot off the pedal?
We are holding on to it. We have not added to it recently. But business trajectory is the same. So we like that the company is trending in the right direction in terms of profitability and cash flows and payouts that the company keeps paying out. So it's okay. It's not very, very expensive.
Still not expensive. Quick final question. Raunak, we have 30 seconds left. US technology. You guys were the first movers in this market so many years ago, right? You're still holding. I don't know. Have you trimmed anything in 2023 in these positions, Meta, Alphabet, etc.? What's your call, given the uncertainties?
So the valuations have come off quite drastically. So we've added a little bit wherever we could have dividend cash coming in from these companies. But we haven't sold anything in the US. In fact, the position itself naturally has shrunk because of the RBI limitations to invest abroad.
Okay. We'll leave it at that. Thank you, Raunak, for joining in. Enjoy your weekend. Get into a break. On the other side, we'll tell you what you can buy today to sell tomorrow or sell on Monday. Technical calls coming in from our experts. Welcome back. 17,600 on the Nifty, 950 points up on the Sensex. But just right now, in the last 5 minutes, some of the gains in the Adani Group stocks are getting trimmed. Adani Ports is off a tad bit from the day's high. It's still up close to about 10-odd%. But just pull up that intraday chart, and in the last 10 minutes, some of those gains are getting trimmed to some extent. Mitesh Thakkar is with us now for a few Friday calls. Mitesh, what do you have for us?
I have BTST call. Yeah, I have two buy calls on the stock side. IndusInd Bank is something which has come on the radar. So that's a BTST. Keep a stop at about levels of 1117 and 1116 and a target of around 1145 on the upside. And ICICI Bank also, that's another stock which is closing with some strength. That's a BTST with the stop just below levels of 862 for targets of 88.
All right. Mitesh, thanks very much. We'll come back in a bit. 12 minutes to go for close. Deepan Mehta, Director at Elixir Equities, is joining in to take some questions. Deepan, good to have you with us here. Thank you very much. I mean, after a long time, we have a strong surge higher, Deepan. So I have to ask you, and you've been sort of cautious for a while. It's worked out very well. Are we at a turning point in some sense in terms of just retail sentiment, etc., with what has happened yesterday with the Adani Group? Or you think, we're reading too much, just one day price action so far?
Good afternoon, Prashant, and thank you for having me on your show. That's so googly to start with, whether the bottom has been formed. That's the question you are asking, and these things are very difficult to answer. All that I can say is that we need to build on these gains, and you have to have a pattern of higher tops and higher bottoms. And only then you can conclude that the recent bottom was actually a very strong bottom. But there's no denying the fact that the movement in the Adani Group stocks is driving the sentiment for the time being. And the days on which they are up, I think we are seeing a decent amount of trading flows also, and investors sitting in the sideline also putting the money to work. And the days that there is a sell-off over there, the sentiment is in the negative. My sense is that maybe, we are not as optimistic as we were, say, a few months ago or a few weeks ago. Because this entire interest rate inflation scenario, which is a big drag on the market, that is not getting solved soon. And in fact, the timelines for flattening out of the inflation and the interest rate curve is just getting dragged longer and longer. And there is no visibility when that will turn. Until that point of time, I think markets may remain pinned down. So it's a longer waiting game than we thought earlier. No doubt you can take respect from the fact that the underlying fundamentals of the economy and corporate earnings are keeping on improving. And therefore, there's a compression of PE multiples. But when this trend will reverse and when we get into a full-blown bull market, will be dependent on the point of time when inflation has peaked and interest rates flattened out and maybe start to decrease a few months later.
Okay, all right. Hi, Deepan. Good afternoon. Deepan, as we speak, actually, the Nifty has come off 50 points off the high point of the day. So there's clearly some profit taking before we get into the weekend. So just keep an eye out on that front. Deepan, earlier we were talking about, a couple of cement stocks. And Ramco Cements is up close to around 1% odd. Any view on that name?
Yeah, good afternoon, Nigel. No, our view on cement and almost all cement stocks is negative. We believe in buying the cement consuming companies, real estate, engineering, construction. I think better prospects over there. Cement is a great deal of uncertainty with the way the capacities are coming up and their inability to pass on cost increases. From time to time, you will get rally in cement based on higher cement prices or better volume flow. But I think that the best days of cement, at least in the medium term, are behind. And next 2-3 years will be a challenge for cement stocks to outperform the broader market indices. So I'm remaining nil to a very low weight as far as cement stocks are concerned. Their capital ratio, their return ratios are going to certainly deteriorate, as also the capacity utilization and the operating profit margins. So I'll be very cautious in cement.
All right, Dipan, stay on. We'll have some more questions for you. Quick break, and then we'll get back with the close. Okay, there's some news coming in. This is Yes Bank and the 81 bond case. Let's just go over the flashes. The Supreme Court has agreed to hear a plea filed by Yes Bank RBI against the Bombay High Court order scrapping the move by Yes Bank administrator to write off bonds worth 8,300 crore rupee. This was, of course, something that was a very contentious issue in terms of how AT1s, additional tier 1 bonds, are going to be treated. And the understanding was that they're quasi-equity, and when equity is getting written down, so do these bonds. And the matter then went to court. The Supreme Court has extended the stay on the Bombay High Court order till further orders by the Apex Court. So that's some important news coming in on this issue of AT1 bonds. Well, Dipan, let's just sort of get your final thoughts in, considering that the mood is slightly more optimistic. Give us one or two of your, conviction bets, maybe one from the large cap space and one a mid-sized company, if you have one that comes to mind.
Yeah, usual disclosure, we and our clients are invested. Large cap, I would pick Larsen and Toubro. I think no reason to wait. We all know the reasons for why the stock is on the buy list of many analysts and fund managers. And amongst the mid-cap stocks, we can usual disclosure, we're very positive on IDFC First Bank. And it's got best-in-class growth rates and operations, a very dynamic management, and by and large, I think the balance sheet is completely cleaned up and now focused more on retail lending. Particularly impressed by the way the CASA has grown for the company. So these are my two picks for your viewers. But again, as I said, our views could be bad because we are invested in them.
Okay. All right, Dipan, we'll leave it there. Thank you very much for your time. It's always a pleasure having you with us. Quick chat today, but useful. Thanks indeed. Well, let's just quickly start wrapping up things because there is, 2 minutes to go for close. We're going to end up 270 points on the Nifty, which is, the high, by the way, was 17,644. So we will end about 54, 55 points off the highs, but this is still a very, very solid close. By the way, just under the 38% retracement of the recent fall. That number is 17,591, and the close today will be 17,588. I think there will be some movement after the last 30 minutes prices are averaged. So we'll see. But it's undeniably it's a solid close. I think Bank Nifty and PSU banks there are the two areas which provided a lot of help. And all 10 Adani Groups, listed Adani Group stocks ending higher. Those are the two pockets which saw lots and lots of gains. Rima.
Well, the big ones there, Adani Enterprises 17% higher, Adani Ports up 10%, Ambuja ACC Cements also closing with a gain of nearly 5%. Just in the last 10 minutes, you did see some profits being taken off these names. In the PSU banking pack, it's State Bank of India which led from the front. That stock was up nearly 5%, but outside of that, Union Bank, UCO Bank, Bank of Maharashtra, these stocks saw outsized gains of nearly 7 to 8 odd %. Strength also seen in Bharti, Airtel, ITC, Reliance Industries, HDFC Bank, Tech Mahindra Bank. So a lot of private sector financials also participated in the up move. On the losing side, Tech Mahindra, they had an analyst day today. And the company laid out 2 more growth vectors for the company. They will be focusing on products and platforms, but the street doesn't appear to be convinced on how this will help them, regain the underperformance. Tech Mahindra struggling in trade, down nearly 2%, and also cuts seen in names like UltraTech and Cipla.
Well, I think it suffices to say it's been a very solid close, and the bulls will go home into the weekend feeling very relieved because we've not had any selling from the highs of the day. Remember, for the longest time, we were saying that this has become a sell-on rally market. Every pop you get, you try and sell into it. That hasn't happened, and we need to see if this can indeed continue into next week or not. But for the time being, closed above some of the key moving averages. The next one, obviously, is the 20 DMA, but we'll talk about that on Monday. I think for the time being, it's just a good-looking, clean,
Friday.
green screen.
And Nigel has already hit the bar. I'm told that he's not there. But, okay, all right. Have a good weekend, gentlemen and ladies. Well, it's a wrap on this edition of Closing Bell, but don't go anywhere. Our special offering on the record comes up next. Stay tuned for that special conversation.